Hard cap, soft cap, the vesting period. What does it all mean? Let's check it out. Hey guys, today we're gonna put the white paper under the microscope and really clarify all the different aspects that it can include. First off, I would like to begin with a quick recap of what we already talked about in our previous video, because all of these segments are also included in the white paper. So first up, you need to understand the point. You need to understand what the project is actually trying to do. Second off, we need to understand the concept of the problem and the solution. Here, most of the ICOs usually fail just because they're trying to solve something for which a problem doesn't even exist. You need to understand that the word blockchain is really a buzzword right now, and people are just throwing in ideas without there being any actual need for it. Third off, we have the team. You need to check who is behind the project and who will run it. Then we have the competition. You need to check the potential competition and the current competition. And then also the partners and advisors. So after this, you will see a segment usually called the tokenomics or the economics of the project. And this segment is really important because it describes how your money will be used. The first concept you need to understand is the hard cap and the soft cap. First, let's draw through two lines here. So the bottom one is the soft cap and the upper one is the hard cap. Now let's say an ICO is raising funds and they have reached the soft cap. Now this is excellent because the soft cap actually represents the minimum amount that the project is hoping to raise. If, however, the project fails to raise or reach the soft cap, that means that the ICO has failed. And what usually happens is that the team reimburses the investors back with their own money. But for this example, let's continue on. So the ICO has raised or reached the soft cap, and they are now raising even more money, and they have reached the hard cap. Now this is a good sign because the hard cap represents the maximum amount that the ICO is hoping to raise. And it also shows confidence that the team knows or has done their research on the whole market and also on their own economics, and they know how much money they need right now and how much money they need in the future to continue on operating. Now there is a possibility that there is no hard cap. This is called an open cap, and this should be a really huge red flag for an investor just because the funds can be misused by the team members. Okay, if we continue on, the second thing we have is the token allocation. Now, here you need to understand how much tokens or how many tokens are allocated to the public, the ICO, or how much tokens does the team receive, or even any private investors, partners, and so on. The most important part is how much tokens does the team give themselves. Because let's say a healthy ratio is somewhere between 10, 20, maybe 25%. Anything above that, I would need a good argument from the team why they need so much money in their pocket right now. Nowadays, ICOs can really receive a lot of money, 10, 20 million or even above that. So just imagine for a random person to get 2 million in their pocket right now, well, those funds can be misused rather quickly. The next concept in the white paper is the vesting period, and this can apply either to the investors and the team members, and both of them are really important to understand. Now to give you an example right here, so let's say you get X amount of tokens. In the first year, your tokens would be in a lockup period, meaning that you could not trade or transfer those tokens from your own wallet. The second year, half of those tokens would be released, so you could trade them in the market, and the third year, the other half as well. Now this is very important, especially for the team members, because if they don't have a vesting period in place, meaning that they can sell the tokens immediately once they start trading. And it lacks actually confidence that they will just not leave the ICO or the projects immediately. Now, if we continue on, here's something I like to call avoiding the 3 deadly sins. Now, all 3 of them are huge red flags, either to have just one or all 3 of them combined. The first one is there is no hard cap or there is an open cap. The second one is there is a substantial token allocation that the team members will receive. And the third one, there is no vesting period to those tokens. Now, these are all huge red flags, and what usually tends to happen in these situations is something like this.
And it's gone.
So yeah, your money can just vanish like that. Okay, so if we continue on with the bonuses and the conversion rate. Now this might be arbitrary for some of you, but let's just check what are those key points that you need to understand. The first thing is you need to know when does the ICO start. Then you need to know how the bonuses are structured, and of course, watch out for the time differences. This is where a lot of new investors miss out on many opportunities such as bonuses and so on, just because they don't consider the time difference. Here we have an example of a bonus structure. So let's say the first week we have 10%, the second week 5%, and so on. And this is something that the team members actually structure themselves. So it can be done in many ways. It can also be done in, let's say, how much you actually invest in the ICO. If you invest, let's say, 15 ethers, you get 10%. If you invest 10 ethers, you get it. Now, if we continue on with the price and the conversion rate, now this can be stated in one of two ways. Either for 1 ether, you get X amount of tokens, or one token is worth, let's say, 10 cents, 1 cent, or even $1. And lastly, you need to look at the roadmap. The roadmap really matters, guys, just because, first off, you see what the project or what the team members have done so far and what are their plans to do in the future. Now, what I like to do is also check up if they have been consistent with the deadlines in the previous goals that they have achieved. And because this shows that they will also be consistent in the future. That's it for this video, guys. Hopefully this was helpful. The purpose of this video is really to provide you guys with the best information we can offer so you guys can avoid those basic red flags when investing in ICOs, or just to avoid some unnecessary headaches. Thanks for watching, guys. Cheers.